picture it, there's a building, and then the first 4 or 5 stories of the building we built is right up against it. And then after the 5th floor, it extends over the roof of the other building and then goes up another 15 floors.
Wow.
They end up looking like Tetris pieces that, didn't quite land right.
Wow.
It's somewhat common in the city. There's even a building downtown I believe, around Tribeca that I think they refer to it as the Jenga building, because it had some cantilevering and the architect went with it and staggered the floors. So it's, when you see it, it's that building.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Jonharold Cicero is a real estate attorney and partner at DL Partners Law Firm in New York City. He's also a real estate operator and an investor in 4 states. Jonharold, welcome to the show.
Thank you. Happy to be here.
Absolutely. The pleasure is mine. Jonharold, there are 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start, where are you now, and how did you get there?
I started as a child who grew up in New York City and saw the effects of gentrification firsthand. I had a single mother, and she bought a small apartment in an area that wasn't so great. And over 20 years, it became a phenomenal area because everything around us got built up, and she was able to cash out, and it helped her get into retirement. And that's where I got the real estate bug. I wanted to become that person that had the capability of gentrifying neighborhoods and being involved in that process. I was originally going to go get a MBA and learn about real estate that way. And somebody gave me very, very sound advice and said, unless you're getting an MBA from a top 20 school, you're not going to be working on Wall Street in private equity for real estate. Become a lawyer so you have a fallback. And that's what I did. I went to law school, focused on real estate, which was brutal because I was in law school during the Great Recession. So there wasn't too many real estate jobs around, but I stuck with it. And a lot of my colleagues went into bankruptcy work and restructuring, but I stuck with real estate because I knew that's where my passion was. And 15 years later, here I am. So it worked out.
It worked out. No, this is cool. It's going to make for a fun conversation because I think rarely do we get the combination of both investor. I mean, you own your own real estate, you're an investor in other people's deals, but also you are an active attorney that practices some really nuanced parts, I think, probably of real estate law. One thing I do want to comment back on, and this is a beef I have had, I think, with people that are opposed to gentrification. It's kind of a dirty word for a lot of people, where they're like, oh man, these terrible humans that come in and buy neighborhoods and take them from dirty, dumpy little neighborhoods and actually make the place decent. You were the recipient, or your mother was rather the recipient of the benefit of that, right?
Right. I think from the perspective of most people, especially if they're renters, gentrification is a horrible term because it means rents are going to go up. If you own, you're going to reap the benefits of the price increases.
Right. Yeah. The price increases again, I've never quite understood the mentality of improving an area being a bad thing. Like, oh, we're going to make this a decent place for people to live again. Imagine how horrible a person you must be. So I love that's how you caught the bug, was just watching it firsthand and said, man, this is something I want to do. Tell me on, I guess, what are you working on the law side of things right now? What are some cool projects or some stuff you're seeing happening in the marketplace?
I represent a lot of wealthy family offices and private equity funds, and anyone from small and mid-sized investors to publicly traded REITs and publicly traded development companies. So I do a lot of new construction condominiums. If you ever see the show $1 Million Listing on Bravo with all those brokers, and they do a new construction condo, I would say for every 3 that you see on the show, new construction condos, I'm the attorney for one of every 3 of them. It's constantly my clients on the show. I know all those brokers on a first name basis. So I do a lot of that work, but I also do a lot of buying and selling commercial real estate, whether it be apartment complexes, office buildings, apartment buildings, shopping centers, sometimes hotels, and then also in buying and selling, representing the borrowers and negotiating their loan documents, and doing corporate structuring structuring for the terms of their investors and how they're entering into the deal, 1031 exchanges, sometimes reverse 1031 exchanges, and some more complex deals. I just did a deal at the end of last year where we bought a property. My client was selling a property. They were buying an apartment complex in the $40 million range, and they had a joint venture between a family office and a private equity fund that was run by the children of the family office. The private equity fund sold something and did a 1031 into it as a tenant in common, and the family office was still trying to sell something and wasn't going to close in time, so we had to do a reverse 1031 for that tenant in common so that they could come together, and then they could subsequently sell their property and get the cash, the tax deferred exchange value out of the reverse 1031. So complex stuff that keeps it interesting, but and then a lot of straightforward stuff too.
Wow. Yeah. I bet that is, like you said, that's the stuff that keeps it interesting. It's probably also the stuff where you get to really put your creative problem solving hat on. Is that part of what keeps it interesting for you?
Absolutely. And it really, you run into so many varieties of deals, and over time with more experience, I've been doing this for like 15 years now, hundreds and hundreds and hundreds of deals of all different asset classes, different areas, different sizes, different structures, and being able to tap into those experiences as resources to structure new deals. And especially with some of my less experienced clients, being able to come in, clients who are not private equity funds and don't have in-house counsel and separate financing guys, being able to share with them some of the opportunities and options that are available for them to better structure their deals. I mean, that's where they get the most bang for their buck with me. You get what you pay for when it comes to attorneys, and having a firm that's real estate centric, that's primarily all we do is real estate here. Having so many colleagues that I can refer, and bounce ideas off of, it's beneficial, especially in New York City where you're doing a lot of, development, and you're up against your neighbors. You need access to their property in order to build your property. Like it gets sometimes out of control. So it keeps it interesting, and I enjoy being able to help my clients grow because I see it over the course of years, where they go from $2 million projects, and now 10 years later, we're doing $20 million projects.
Right. No, that's really, really cool. When you look at because you're an investor as well, and so you get to see probably, and like you've mentioned, the gamut of transaction types. Are there risks you see people taking right now that you personally aren't comfortable with? Obviously, your clients can do what your clients can do, but what do you see in them? I guess the question is, what do you see in the marketplace? What are people doing right now that you're like, wow, man, that doesn't fit my investing criteria?
I think as an attorney, I'm naturally risk averse. I don't think I was as risk averse before I became an attorney, and then it became more risk averse.
Right.
And it's a constant internal struggle for me as an investor to battle some of that risk aversion. But I do have clients who do some crazy structures with regard to buying up lots and trying to secure air rights. We have that in New York City where you can buy, if you have a building next to you, say you bought a corner lot and you have a building next to you that's only 4 stories, but as of right has the ability to be 6 stories, you can buy their air rights and transfer them over into your zoning lot so that you can build an even taller building on your lot than you would legally be allowed to. So some of those deals that get very complex, I do the zoning law development agreements for those transactions. But for me personally, I mean, that's way too big for what I would invest in, or would take on as the main investor. I like more of, I'm not so much into the Class A high-end luxury properties. I like more recession-resistant investments, Class B properties and Class B neighborhoods. Constructions that get complex with air rights and other things. My clients, I'll help them do it, but that's too much for me at this point.
Yeah, no, I completely understand that. And we've never actually covered on this show, we're pushing 800 episodes at this point. I don't think we've ever actually gone in depth on air rights and kind of how those are structured. I mean, that just seems like the Wild West. I mean, maybe it's not because you're in New York City, you guys see it all the time, but I guess briefly, can you just tell us, is it just like, I mean, how do you even establish what those air rights are worth?
I just did. Yeah, I know that's a, a constant debate based on where the neighborhood is. And what the air rights that are available are, and without diving down the rabbit hole, you have to buy air rights of a neighboring building before you can approach the building on the opposite side of that building so that you can buy their rights. You have to have the continuity of one building into the next building. You can't just go from, leap your neighbor into a subsequent building. So it gets crazy. Determining what the value is based on comparables. It's no different than comps that you would have when you're buying a property. What are the comps for people who are buying air rights? So it's a tricky transaction, but it gets very interesting. I just did a building where they cantilevered over a neighboring building. So the first four, if you could picture it, there's a building, and then the first 4 or 5 stories of the building we built is right up against it. And then after the 5th floor, it extends over the roof of the other building and then goes up another 15 floors.
Wow.
They end up looking like Tetris pieces that, didn't quite land right.
Wow.
It's somewhat common in the city. There's even a building downtown in, I believe, around Tribeca that I think they refer to it as the Jenga building, because it had some cantilevering and the architect went with it and staggered the floors. So it's, when you see it, it's that building. But fancy.
I'm going to have to look that up, the Jenga building. I'm sure that that's well documented.
I think it's 56 Leonard Street, I think is the address.
Okay, there you go. I'm going to look that up. That's really fascinating. And again, I think I hear the you really enjoy kind of that more complex, nuanced part of what it is that you're working on. What are some opportunities you're seeing right now, I guess, in the broader, either in your market or just, across all the deals that you see coming across your desk and opportunities you're working on? What are some stuff you see right now that you're like, man, this is a really, really cool space, and I see people doing really well with it?
I think, multifamily is always strong. I love multifamily from an investing perspective.
Oh.
I like a little bit of mixed use as well, but really retail space, you got to have service tenants. You can't have, retail tenants who are just selling products. Right. They got to be a service, like a salon or something like that, or selling food or something. But interesting things that I see, here in New York City, in this market, prices keep going up and up and up, and outer markets in parts of northern New Jersey and other parts of the 5 boroughs of New York City that when I was a kid you would never want to go to are now starting to trend and become more valuable. I look at this, in particular, Dyker Heights section of Brooklyn was a very much, my family is from Italy, and a lot of Italian Americans had settled there. When I was a kid, my great aunts and uncles had houses they bought for $40,000 over there. The same house with no improvements is now $1.5 million. So the values have gone up. What I do think is interesting that I see a lot of in New York City is people, because it's a higher point of entry, a higher price to enter the market. I see people doing a lot of joint venture deals and then coming to me to subdivide a building into separate condominium units. So you can have, I just did one maybe about 2 years ago here in Midtown, where we had 2 bigger players enter into a transaction where they bought a existing office building. They went through the variance to get the building redesignated for zoning purposes, and then we split the building into 2 condominium units. One was the first floor through the 10th floor or 12th floor, and the other was 12th floor or 13th floor all the way up to, I think it was the 30th floor. And the lower portion became a hotel, and then the upper portion became individual residential condominium that was above a hotel in the same building with a hotel entry and all the amenities of a 5-star hotel or 4-star hotel. So, they can add value to that. But it was 2 different partners that entered into the deal for the joint venture to acquire the building. And one is a hotel operator and owns the hotel condo, and the other is a condo developer and owns the residential portion that they then further subdivided. So I see a lot of those kinds of opportunities where people, and even subdividing a larger lot that people buy. I had a client who just did that in the Bronx and on the edge of Yonkers, where we bought a huge lot, and one was an older school building, and they subdivided that into a separate tax lot of its own so that they could rent it back to the city to use as a school, and they're going to add the improvements. And then this huge vacant part of the lot was further subdivided, and now a film studio is being built there. So
that's really cool. Yeah. And I guess that's the way that when you get into those creative structures, and especially dealing with the dollar amounts that you're dealing with there in New York City, it makes sense, to have the residential condo developer and operator partner up with the hotel operator. I can only imagine the amount of, we always say good fences make good neighbors. And so the amount of just working through on the front end, the nuances of how to structure those deals.
The easement that I had to write with regard to mechanicals and shaftways and whatnot was quite lengthy, but.
Yeah. And when you got done with that, did you ever hear back from those owners and those operators? Did you ever hear back from them saying, hey, if we had done this, or I would have added this provision in there or structure it differently next time?
Yeah, I mean, there's always things you want in those agreements, but the other side, is also represented by counsel. In that transaction, I represented the hotel portion. So the counsel who represented the residential portion had their own comments because they wanted things to be a little bit easier for their client. So there's a give and take. You got to reach a compromise, and down the road, people start to stop. They forget what was written, or they don't refer back to it, and they try to get away with things, and then there's a dispute. But if it's written well enough, then you can go back and point to certain provisions and say, can't do that. We already accounted for that in the provisions here. But to your point, on a smaller scale, I think a lot of investors maybe overlook it in finding value, even in buying a smaller building that's mixed use, or a lot that has a building on it that's in good condition that they maybe want to do, alterations to, but there's, additional room in the back. Maybe they can get variance. I did something in Northern Jersey where we had a building that had a huge backyard, and it was on a corner of an intersection. And we were able to keep that building and, put a commercial tenant in, and there were some apartments above it. But that huge backyard on the building was along the side street, not the main avenue. And we were able to get a variance and do a curb cut and take that yard and separate it from the building, because the building didn't really need it. The retail tenant on the first floor wasn't using it. And then make that into additional parking with a curb cut. And now the upstairs tenants can rent out parking spaces. And, in an area where there was a hard time finding parking, we added tremendous value by doing that.
Right. No, that's really, really cool. And there's so many different parts of this. I would assume that you oftentimes, correct me if I'm wrong, have to collaborate with other members at your firm there, because it's like, hey, this is your specialty in getting whatever the variances are for curb cuts and all those things. I mean, is it part of just kind of more of a collaborative law firm you're working inside of?
Yeah, definitely. And obviously, as the years go on, you meet a lot of attorneys at other firms, and we, reach out to each other and say, have you ever seen this? Do you have this kind of agreement that I could use as a base form for what I'm trying to do? And we help each other out. Some attorneys are adversarial, but many are decent people, contrary to popular belief. And we work with each other. But certainly here, our firm is a real estate firm. The only thing we don't do is land use and zoning, but we have I'm in the commercial department, I'm in the condo development department, we have a residential department, a leasing department, a construction department. So there's a variety of people here that I can bounce ideas off of, and that's a great aspect to it. For me personally, I think there are some brilliant solo practitioners and small firms out there. Twice this has happened to my clients where they have a health issue and everything comes to a standstill on your project because the attorney had a health issue and there's nobody else to rely upon, or they're doing things based on their experience, but maybe they're not so experienced in construction aspects, of access agreements and construction issues. And they might be great at representing you in the acquisition of the property, but the construction side, it costs you some money that if you'd gone somewhere else, Like I say to my clients, you get fast, good, and cheap. You get to pick two of the three.
Right.
One fast and cheap, not going to be good.
Not going to be good. I love that. I love that I've heard that before. And I think that's a brilliant statement there. How are you scaling your own personal real estate investments? I know you've kind of told us a lot about the law landscape that you're working inside of, how you guys handle and scale the opportunities for your clients. What are you doing on a personal front for scaling your real estate holdings?
So right now, I have some smaller properties that eventually I will do 1031 exchanges on. I've had some value add opportunities in those smaller properties. I got into them at good prices with great interest rates. So I'm looking at long term, just raising rents and continuing to add value. Or like I have another one I'm looking to do variance for parking to add more parking to it. And eventually I'll 1031 those into something bigger, along with additional accrued equity that I've put aside for those investments. But I've also started investing with clients and friends who invest and develop much larger projects that I can personally take on my own. And I've put equity into those deals, timing it so that 3 years out, 5 years out, I have different money coming back to me that can then be reinvested, because, I want to get to the point where I've got, 50 unit buildings instead of 5 and 10 unit buildings.
That's really, really cool. I love that. I love what you do here, Jonharold. This has been a blast having you come on the show today. I mean, I feel like I've just scratched the surface of what it is that you know and understand about your local market there, on how to work inside of it, the nuance to what it is that you do. I mean, you guys have to compete with. I mean, I look at some of the zoning. I got some report back from somebody today on some zoning issue, and it was, I thought it was complicated. I'm like, this is a mess. But then hearing you talk, I'm like, we got nothing. This is really easy compared to what Jonharold's working on.
But it's like anything else. The more you do it and the more complex it gets, the easier, things that seemed like monumentally difficult 5 years ago, now I'm like, I've seen that 5 times. I got that. That's like anything else in life, right? The more you do it, the better you get.
Absolutely. I love it. Jonharold, if our listeners want to get in touch with you, learn more about you, and or work with your firm, what is the best way to do that?
You can reach me by email. I don't know if you'll be able to put that at the bottom of the screen or something.
I can put in the show notes.
Sure. And then always by phone. Those are the 2 easiest ways to reach me, and LinkedIn. I am frequently on LinkedIn.
Fantastic. And can you say it, just for the people who are only listening to this show and maybe don't have access to their computers or otherwise to find those, what is your email address?
Sure. It's Cicero, JCICERO @DLPartners, DogLarryPartnersLaw.com. So Cicero @DLPartnersLaw.com.
Fantastic. Jonharold, thank you for coming on the show today. I do appreciate it. This was awesome.
I appreciate it. This was a lot of fun. Thank you for having me.
Hey, thanks for listening to the How to Scale Commercial Real Estate podcast. If you can do me a favor and subscribe and leave us a review on Apple Podcasts, Spotify, Google Podcasts, whatever platform it is you use to listen, if you can do that for us, that would be a fantastic help to the show. It helps us both attract new listeners as well as rank higher on those directories. So appreciate you listening. Thanks so much, and hope to catch you on the next episode.